to talk about affiliate payments. And they've always been a discussion topic within the affiliate world, but it seems that more recently they are becoming more of an acute problem and they're much more front and center of different conversations.
I think you're right that in the last couple of years, there's been a lot of broader economic pressure, particularly on brands. And I think that then trickles down into the other parties that are involved. At the end of last year, we did a big survey of hundreds of publishers called The Voice of the Nation through the APMA.
Mm-hmm.
And in this, we asked publishers how much payments were impacting their business. And over half of the publishers that responded said that it significantly impacts their commercial progress and growth.
And I think that's interesting because when I first got into affiliate, the main talking point was just the flow of payments.
Yeah.
So actually the technology that was enabling the flow of cash through the ecosystem, right? That was a bit broken. It was fixed. No one was really talking about how long it was taking. And interestingly, Awin from the very outset has always been front and center transparent about, payment timings, how long it takes for publishers to get paid.
Mm-hmm.
But I've certainly seen over the last definitely 3 years since probably the APMA set up and we started talking about this, it's become an acute problem.
I think there's also a really interesting human part to this as well, because 1 in 5 of the publishers that responded also said if they were paid faster, they'd be able to create more jobs. And at the moment, we're in such a difficult situation with redundancies and employment. So the fact that we could actually be helping people have somewhere meaningful to work if payments were faster as well.
We always think about it in, money moving across screens, but when you start to talk about the impact it has on people's reinvestment and ultimately the challenges companies have got with just employment generally at the moment, that's a real benefit, I think, to just getting cash moving more quickly.
The APMA has been around for 2 years. We're still relatively in our early days of our industry having an active trade body.
Mm-hmm.
We started out with a sort of foundational layer back about 18 months ago with a big payments survey that we did. So this was a survey that was compiled with the help of about a dozen different affiliate companies, asking all the different questions about how payment systems actually work at networks. Off the back of that, we got the same publishers together again, and we really wanted to think about how we can set best practice for that. So we determined that the way forwards for that was to make a code of conduct for advertisers.
Mm-hmm.
So it's a voluntary code of conduct. Advertisers can opt in, and it's designed to really outline best practice in payments. We then had about 20 companies actually help write the code of conduct, and we drew on real sort of specialist experts for it. So for example, Top Cashback helped with the part about transaction queries. Broadband Genie helped with the part about compensation and how to calculate that fairly. And then we signed an open letter basically saying, come on, everyone, let's do this. This is important. And the code of conduct came to life.
We've got advertisers listening and they want to know more about what's in the code and what it's asking of them. What would be the highlights?
Broadly, as I said, it touches the process from a sale having tracked through to cash in a publisher's bank account. So that's touching on things like validations, compensation, managing your budgets, rather than explain everything that's in it, because this could turn into quite a long podcast. Instead, just to talk a little bit about sort of the ethos of it. So if we took a sample clause, so for example, validation windows. So a validation window means from the moment when a sale has tracked, how long does it take before you tell the publisher whether or not that sale is approved for invoicing?
Mm-hmm.
And what we basically say is choose your validation window that works for your business as an advertiser. Clearly publicize that, put that in your program description, communicate that to your publishers. And then once the window has expired, auto approve those sales. And then stick to the decision that you've made. What we're not saying is every validation window must be 30 days and that has to be what works for your business, because businesses are just so different. If you're a retailer with a 30-day returns period, maybe that works for you. If you're a travel brand or a mortgage company, you might need a validation window that is in the years, not the days. And we're basically saying the key is clarity, communication, and predictability. That's really what publishers need.
It's a sort of a call to action for advertisers in all of those segments and saying, right, if your competitor is coming out and saying, well, I can validate on 60 days, but actually you think, well, I can validate on 30 days, well, then you're going to be out there pushing to do that because, publishers vote with their feet.
We sincerely hope that advertisers will see that opportunity of going, you know what, I'm Payments Code of Conduct compliant. Let me shout that from the rooftops so that publishers know they can invest more in my campaigns.
Yeah.
We have to all be aware that these big businesses are not going to change and bend for a number of affiliates because they're much bigger businesses than that. However, back to my previous point, that transparency, that traceability and that certainty, you deserve in your business relationships to have those three things. And I think payments hasn't been like that for quite a long time. And that's caused distrust, misunderstanding, probably lack of people coming into a sector.
I guess if we look back over, say, a decade ago, there was a lot more sort of entrepreneurial spirit to the affiliate industry and a lot more affiliates that could grow out of their own cash flows. Whereas I feel like a lot of the businesses now, there are brilliant new publishers launching, absolutely, but a lot more of it will typically be VC backed. The access to capital that's required is significantly bigger. So there's less of that sort of smaller innovation that can happen. And I think that's because of the changes in payment speed and the uncertainty that goes with that.
Yeah, I mean, it's just access to liquidity. In that first 6 to 12 months of any new business, if you know you're not going to get paid for 6 months, you've got to find someone that's willing to provide the whip to do that.
Yeah.
And that is going to discourage some of those entrepreneurs from starting those businesses up.
So Chris, this gap between the affiliate managers and maybe their commercial and procurement teams is probably quite a lot about Revving and why you exist.
Yes.
I suppose, is there anything else that you can add to that development of Revving and maybe talk a little bit more about what Revving is?
We enable publishers to get access to any of their pending or approved commissions instantly. And we normally do a weekly run to all of our customers. Okay. But it basically means that if we can see it in the system, even if it's pending, then we'll advance either a portion of it. So obviously with pending, there are return windows, there are dilutions. So from our perspective, we'll advance as much as we possibly can on that. As soon as it's approved, we advance 90% instantly.
There's quite a few different types of publishers that you work with. Would you say there's any particular types that you really think benefit the most from the work that you do with them?
The obvious customer of ours is someone who's got to pay a supplier on 30 days, but you know that you're not going to get paid on that for 60, 90, 120 days. So that means you as the publisher are the float.
Yeah.
You are the bank. You are effectively every month having to hold to one side enough money to wear that 2-3 month period, possibly longer. And most of the FDs and CFOs we talk to, what they're really interested in is, can we free up that cash flow? Because there's so many great initiatives we want to do as business. There's a whole load of new people we'd like to hire. But I'm really sorry, commercial team, we've got to keep this float available pending, getting paid in a few months' time. So whenever we can collapse that, and obviously Revving is doing that because the industry sort of requires it, that means that those people can release the purse strings and the commercial teams are happy because there's more opportunity to do innovative, great things as a business and reinvest. It's a really positive story, a growing company that can grow even more for doing the right things, as opposed to you're cash strapped, you just need it because you need to keep the lights on. And I think there are companies at all stages of their growth cycle and journey generally who, working capital cash flow is critical for a whole load of different reasons.
Definitely. I think we can see there's been a real rising tide in this conversation over the last couple of years. And I think quite quickly, the people that come out and adopt this fast and make a noise about it will be the winners. And those that don't engage in this conversation, I think genuinely do risk getting slightly left behind. Publishers can vote with their feet as to which advertisers they promote. So I think that will also play out over the next couple of years.